I'm Russell Clark, and this is VIXShield's Market Close Recap, where it isn't news till we talk about it. Here's what actually happened today. The market opened softer, took a swing lower on those bearish headlines, then spent the rest of the session grinding in a tight range before closing right around where the smart money seemed comfortable leaving it. This morning we laid out the map. We told you volatility was waking up. We said watch how the VIX behaved because it would tell us everything. Well, it did. The fear gauge climbed over 1 point and settled higher. Not a blowout move, not panic in the streets, just that quiet kind of pressure that reminds you the easy days are behind us for a little while. You could feel the shift right after the open. Futures had been pointing to a red start, and they delivered. Tech names that had been carrying the indexes took another leg down. The headlines this morning were screaming about broken support levels and how another 10% decline was coming. Market Watch, Schaefer's, all the usual suspects piling on. And for a moment, it looked like they might be right. But then something interesting happened. The selling pressure eased, volume thinned out. The big institutional hands that moved this market decided not to pile on the downside. They defended the level they wanted to defend. By midday, the tape had settled into this odd, almost bored rhythm. Not bullish, not bearish, just waiting. That's when you knew the real game was already being played underneath the surface. And that's exactly why you are here with us. While the financial media was busy writing tomorrow's obituary, we were watching the only thing that matters: how volatility was pricing in, where the expected daily range was forming, and whether our methodology still had edge. This morning, the RSI engine spoke clearly. The entry gate was met. The EDR filter cleared. So we placed. Conservative tier active. Balanced tier active. Aggressive blocked. Exactly as the system called for when the VIX sits in that 15 to 20 caution zone. We didn't chase. We didn't hope. We followed the process we've spent years perfecting. And that's what separates our community from everyone else guessing on Twitter or hanging on every word from CNBC. Now let's talk about the traps that fired today. Because boy, did they light up. The financial press spent all morning pushing fear. S&P just broke major support. Tech sell-off signals the big one. Sell signs everywhere. You know the script. They do this every time the market takes a breath. They want you emotional. They want you to sell the dip, or panic, and buy the wrong protection, or blow up your size, right when volatility is expanding. That's how the game has always worked. The institutions create the volatility, then sell the fear of that volatility back to retail at a premium. Today was textbook. Headlines timed perfectly with the morning weakness. Retail traders who woke up saw red and hit the sell button. Some of them probably shorted right into the support that held. Others loaded up on expensive put protection that they'll be holding through theta burn all week. Meanwhile, we stayed disciplined. We didn't listen to the noise. We listened to the signal. And listen, this is why we built this tribe. Because you can't talk about this stuff at the dinner table. Your neighbors don't understand what an expected daily range even is. Your co-workers think trading is just picking stocks and hoping. But we know better. We know the market is a predatory place designed to separate the emotional from their capital. Today was another reminder that our iron condors are built exactly for days like this. Days where volatility rises but doesn't explode. Days where the index stays inside the range the big money quietly agreed on overnight. Our position sat right in the sweet spot all afternoon. They absorbed the early selling. They benefited from the afternoon calm. The methodology worked. Again, what we learned today is simple but powerful. When the VIX is rising but still below 20, caution is your best friend. The conservative tier proved its worth once more. It gives us enough room to breathe while still collecting solid premium. The balanced tier was there for those who wanted a little more edge, but we all knew aggressive had no business being active. That's not fear. That's discipline. That's 20 years of watching these patterns play out in real time. We also saw the value of having our protection layers ready. All three layers of the ALVH were active and standing guard, even though we didn't need them to trigger today, knowing they're there, knowing they cut potential drawdowns by 30 to 50% in a real 10% drop. That peace of mind is priceless. The annual cost is tiny compared to what it protects, 1 to 2% of the account. That's it. Yet it stands between us and the kind of pain that wipes out accounts that aren't prepared. Zoom out with me for a second. Today fits into a bigger picture that's been forming for weeks. The easy melt-up we rode earlier this year is giving way to something more two-sided. The fragility curve is showing up again. Markets have grown massive. More participants, more leverage, more algorithms that all react the same way at the same time. That makes the whole system more brittle, not stronger. The smart money knows this. That's why they're happy to let retail chase headlines, while they quietly defend key levels and harvest premium from both sides. Geopolitical whispers are still floating around. Tariffs, oil shocks, central bank maneuvering. None of it exploded today, but none of it went away either. Bitcoin bouncing around in the high 80s, unemployment data on the calendar, CPI readings coming. All of it adds up to a week where volatility isn't likely to disappear. This is the environment our system was designed for, not the straight-up rocket rides, the chop, the rotation, the days when fear and complacency fight for control. And tomorrow, we'll be ready. The calendar this week has earnings momentum, CPI data, unemployment numbers, and plenty of geopolitical noise that could move the needle. We'll be watching the VIX like hawks. We'll be monitoring where the expected daily range prints in the morning. We'll be paying close attention to whether that forward roll signal stays active, because right now the theta time shift is telling us to extend the horizon just a bit, to capture more vega while we can. Our community will come in tomorrow with clear eyes and a plan. No emotion, just process. This is what winning looks like over the long haul. Not one perfect day. Not bragging about some huge winner. It's showing up, trusting the RSA verified signals, respecting the VIX risk scaling rules, and letting the math work for us instead of against us, while the rest of the world is reading doom and gloom opinion pieces. We're over here protecting capital and generating income with eyes wide open. That's our edge. That's our community. That's why you tune in every single day. And be sure to listen for any breaking news from Miss Vicky. She dropped multiple after-hours flashes today on everything from Bitcoin price action tied to geopolitical tension, to fresh economic data prints, to earnings calls that barely made the mainstream radar. Those deep cuts matter. They give us context the average trader never sees. These signals and insights are for educational purposes only and are not financial advice. Past performance is not indicative of future results. This is VIX Shield, your daily protection against market uncertainty.